Dan Deming, who's at the SIBO. He's the managing director at KKM Financial. Dan, you excited for earnings? You ready for JP Morgan to kick it off?
We're ready, man. Let's get it going. Let's get it going. I'm very excited, actually, because it's going to be a very interesting earnings season, I believe. And I think the banks, as you mentioned, are going to set the tone. And as you continue to see this market gyrate around with the trade situation, you know, the positive tone now is kind of setting up for a potential for us to realize new highs here in the banking sector and the markets overall in the fourth quarter.
Yeah. All right. You want to get long the banks? Is the breakout for JP real, Dan, or does a trade breakdown send this stock right back down with yields if it happens?
It's always a possibility, Oliver, and that's what the beauty of options. That's why it's great to use options in times like this, because they give you the ability to define some of your risk here. So I think that JP Morgan's setting up here and the banking sector setting up here for a potential breakout to the upside. And again, I think, it goes back to what you and Michael talked about just before I came on, but also just the general trends in the marketplace. You know, the banks have held in there pretty well relative to the rest of the market, even with some of the disappointing news and the rates coming down and, China and the global slowing. But now you look at JP Morgan, I think it's setting up for a potential breakout to new highs, as you pointed out, those September highs. So I'm looking at a back spread here, Oliver, and it's really a weekly back spread, and I'm using weeklies in this trade example because you get dollar strikes, where if you use monthlies, you get the $5 strike. So I'm looking to back spread the 2 weeks out, October 25th, 116, sell 116 call and buy 119 calls for the possibility for a breakout above 119.
Okay, breakout above 119, that would be a pretty big deal for JP Morgan, pretty big for the banks as a whole. Dan, I'm curious, do you have to sort of have a view, again, to your point, look, you can kind of buffer some of the downside here. What's the biggest risk in your mind? I mean, is it just looking at bonds? Is it looking at the yield curve and what that's meant for financials?
Yeah, no, I think the bigger risk has the expectations now been converted to a little bit too lofty in just in the last couple of weeks. Again, because you're seeing earning revisions, and certainly JP Morgan, the revisions have been inching higher, and there's been some insider buying. So the expectations have shifted a little bit more to probably neutral to maybe a little bit more positive as you go on this earnings announcement. So that's always a possibility. The nice thing about this trade example, Oliver, is you can put this on for a credit, about a 40-cent credit. So if we do see it reverse and break back below 116 or hold below 116 over the next couple of weeks, you still get to collect that premium from the credit that you put the spread on for.
Yeah. All right, Dan, while we got you, thanks for the JP Morgan trade. Let's talk macro, though. I don't want to take it, I don't want to miss an opportunity here. Stocks are on the move, Dan. If we do get some kind of resolution, the president's tweeting. It's like the most watched daytime television show. Who's shaking whose hand? How long is Luha talking to Steve Mnuchin outside, the Treasury building, all that stuff. I mean, what do you want to do? Do you want to try and ride this wave for a massive pop if there's a truce? Or is this an epic short opportunity?
I think it depends on what your goals are, Oliver. I mean, it's certainly creating a great trading environment. I can tell you the SPX is rocking, the VIX is rocking, the bond markets across the street have been moving dramatically. So there's a lot of activity, there's a lot of trading activity, so I think it's been good from a trading perspective. From a more macro standpoint, I think the diversification is still key here, but I do think that the possibility here, if we get through here, that the expectations are that, the market's poised to go to new highs. I think you're seeing we're going into the fourth quarter here, there's money coming into the market with the hopes that they're going to make some headway, and maybe that's all that we need. We're seeing that play out right now, just that tone, that positive tone that will maybe ultimately lead us to new highs here in the S&P and the rest of the markets, primarily due to the fact that I think there's still money waiting to get in this market, and you got interest rates at pretty much low levels, and so where else is the money going to go? Yeah.
All right, Dan Deming, like it, really good stuff here, an interesting day setting up. Mr. D, we will see you soon. Dan is the managing director at KKM Financial.